Welcome to the Explainer. So, if you've been keeping an eye on the markets lately, you already know digital money is literally transforming right in front of us. But man, the week of May 11th through the 17th, that gave us a massive hint at a fundamental underlying shift in our global financial plumbing. Which leads us to this. Is the era of wild crypto speculation finally over? I know it's a really bold question, but the data from this week strongly suggests the smartest minds, and honestly the deepest pockets, are aggressively moving away from those retail casinos. Instead, they're pouring straight into the foundational rails of global finance. We're talking about serious structural changes to how money actually moves across the globe. Okay, let's dive into this. We've got a quick roadmap today. 1. The digital finance shift. 2. Regulators set the rules. 3. The rise of tokenization. 4. Fintech's consolidation phase. And 5. The road to 2026. All right, starting off with Section 1, the digital finance shift from speculation to infrastructure. We are right in the middle of a massive paradigm shift. You see, the old era was pretty much defined by retail crypto speculation, standalone consumer products, and honestly, a pretty chaotic ad hoc regulatory environment. But this next phase, it's entirely different. We are moving toward wholesale digital infrastructure and institutional on-chain finance. Think of it like building super resilient pipelines rather than just isolated, flashy coins. Moving right along to Section 2, regulators set the rules, moving from policy to implementation. Now, what's really interesting here is how the world's major markets are totally abandoning those ad hoc approaches for concrete, specialized rulebooks. If we look at the UK, officials are pushing hard to modernize payment rules for both traditional and tokenized money. And even more critically, the FCA actually announced that firms could start pre-application meetings under their new crypto asset regime starting right there on May 11th. That is a huge signal, guys. The UK is moving out of the policy design phase and stepping right into implementation. Meanwhile, over in the US, the momentum is all about formalizing digital asset market rules. We're seeing active Senate discussions on crypto legislation and a really strong push for tighter oversight of the riskier tokens. So the adults are entering the room, and the rules of the game are absolutely being cemented. Which brings us to Section 3, the rise of tokenization, building products on the new rails. Okay, you're going to hear this term a lot, so let's break it down really quick. Tokenized settlement assets. I know, it sounds a bit jargon-heavy, but it basically just means digital representations of deposits or funds that are utilized as a settlement layer for wholesale finance and trading. You can think of these tokenized assets as the literal new pipes for financial market infrastructure. Big institutions aren't just treating tokenization as a fun experiment anymore. They're treating tokenized deposits and funds as the actual bedrock of how trading and cross-border money movement will function. And to really ground that in reality, just listen to what the European Commission stated this week. They specifically pointed out that stablecoins can reduce frictions in cross-border payments, and that the tokenization of securities and funds is likely to create additional demand for tokenized money. So this isn't just theoretical tech talk anymore. This is a major global governing body explicitly acknowledging exactly how these programmable rails are solving real-world friction right now. Let's hit Section 4, Fintech's consolidation phase, survival of the fittest. $1 billion. Yeah, you heard that right. This week, FinTech Futures highlighted Kalshi's massive Series F funding round. And that figure alone absolutely proves the sheer scale of investment flowing into financial infrastructure today. The big money isn't funding retail gambling apps anymore. It's funding the companies that are building out the new bedrock of the market. And the headlines from May 11th through the 17th paint an incredibly vivid picture of this consolidation. We saw the neobank Bunk pushing for a Mexican banking license. We saw SoFi acquiring Primary Bid. We even saw strategic leadership changes over at Lunar and the Payments Association. When you string all these moves together, a really clear micronarrative emerges. Companies are aggressively positioning themselves for both international reach and severe regulatory complexity. It's a huge mix of fundraising, cross-border expansion, and strategic M&A. The main takeaway for you? Well, if a fintech isn't positioning for international reach and regulatory complexity right now, they're falling behind, for sure. Now for our final section, Section 5, the road to 2026, always-on programmable infrastructure. So how do we actually get there? The sector is essentially converging on 3 distinct steps. Step 1 is the proliferation of regulated stablecoins. Step 2 is the widespread adoption of tokenized financial assets. And step 3 is the creation of faster payment networks that seamlessly operate across both traditional and on-chain systems. These three pillars are converging right now to create an always-on, programmable treasury management system for the entire globe. It's a real game changer. Because underneath all the flashy headlines we just discussed, the largest financial institutions are aggressively targeting four core themes as they march toward 2026. Faster settlement, liquidity optimization, blockchain-based settlement, and of course, backing the whole shebang up with AI-supported fraud defense. The absolute key metric to watch going forward is whether these institutions can actually move these initiatives out of pilot programs and into fully scaled real-world products. Which leaves us with this final, crucial question. Will 2026 be the year global finance is fully rebuilt on digital rails? If this week's momentum holds, we really aren't looking at a simple crypto adoption phase anymore. We are watching the gradual, irreversible rebuilding of global finance on digital settlement layers. Understanding this shift is absolutely vital to navigating the future of money. Thanks so much for joining me for this explainer, and remember, keep your eyes on the infrastructure.